You apply for an apartment or a car loan, and the answer comes back the same way it always does: denied. Or you're approved, but with a massive deposit requirement and an interest rate twice as high as you expected. It feels like everyone else has the instructions, while you're left sitting there wondering why no one ever told you the rules of the game. This is what's actually happening. You have a credit score, a 3-digit number between 300 and 850 that follows you everywhere and determines what you can access and at what cost. It dictates your rent, your mortgage rate, and even your insurance premiums. Yet most people are never taught how it works or how to influence it. But here is the reality. Your credit score is not a personal judgment or a reflection of your character. It is a formula. Because it is a formula, the outcomes are entirely predictable. If you understand the variables, you can build a high-tier profile even if you're starting from zero. To manage the system, we must examine the exact variables the algorithm uses to grade your behavior. Payment history is 35% of the score. One missed payment drops it heavily. Next, utilization is 30%. If your balance fills a card's limit halfway, you are penalized. Keep it below 10%. The remainder covers account age, mix, and inquiries. Knowing this math reveals the strategy. Controlling your payment history and utilization alone accounts for nearly 2/3 of your entire score. Now we move to the practical application, manufacturing the data inputs the algorithm needs to see. Step 1. Get a secured credit card. You provide a cash deposit, usually $200 to $500, which becomes your credit limit. Because the deposit covers the bank's risk, these cards are accessible to almost anyone, even those with no history at all. The secured card serves as your absolute foundation. It reports you activity to all 3 credit bureaus, exactly like a standard high-tier card. Step 2. Use it for one small recurring purchase only. Pick one streaming subscription or a single utility bill and put only that on the card. This restriction ensures your utilization rate stays locked in that ideal sub-10% zone automatically. Step 3. Set up autopay for the full statement balance every month, not the minimum, the full amount. This strategy eliminates interest charges entirely, while consistently feeding the 35% payment history variable with perfect data. Following these 3 steps creates an automated loop that satisfies the algorithm's heaviest requirements with minimal maintenance. Step 4 is consistency. The system requires time to verify your behavior, so avoid the temptation to open multiple credit cards at once to try and speed up the process. Most people see meaningful movement within 6 months. If you follow the cycle without interruption, a score above 700 is achievable within 12 months. Step 5 is graduation. After 6 to 12 months of consistent history, most issuers will offer to upgrade you to a standard unsecured card. At this point, the institution returns your original cash deposit in full. Because you navigated the formula correctly, you now have the profile required to access apartment leases, ideal car loans, and lower insurance rates on your own terms. A credit score is not a permanent status, it is a record. Now that you understand the mechanics, you have the ability to write that record yourself.